Hey guys, Akil Stokes here. Welcome back to another Trading Edge video, your weekly look around the markets. Started off January on a little bit of a stinker. Middle week was pretty good, getting me back to break even. Then finally had a big week this past week in the market with that Euro Yen trade that we've been speaking about for months, really finally paying off and hitting triple digits. So cool stuff, and hopefully what I show you this week can help benefit you as well. So let's hop in. Let's get started this week on the euro dollar. We're going to start here on the daily, then work our way down. You can see on the daily, we had an interesting end to our week. A few days ago, we did break and close below our previous level of structure support right here. Then we ended the week with two kind of indecision candles. One was a bullish pin bar, which gave us an idea of potential bullish strength. The other one was a straight doji candle, so an indecision candle. And then today, Friday, was an inside bar, which is another sign of indecision and consolidation. And that's exactly what we're going to see here as we go down to the lower time frame. Now, the thing was, at the end of the day, we did have that break and close below. So per our rules, if we identify a break and close below, then we predict a continuation lower. And this also happens to be, and by it, meaning the consolidative period before it, a head and shoulders top. I was going to say a potential one, but that's what we were looking at all week. This one is a head and shoulders top because it has completed. If we look at our initial move up, the end of our extension is our left shoulder. Our first move back, our retracement here is going to be the start of our neckline. This next extension up is going to be our head. Our deep retracement right back down to that structure support level is going to be the second part of our neckline. And then the failed extension up right here is our right shoulder. And then once we had that break and close below that I spoke about earlier, that violates what's called the neckline of our head and shoulders, completing the pattern. So what we would expect here is a continuation to the downside. Ideally, we don't want to see this consolidation first. We want to see a retest right here, which is beautiful, and a continuation down. So you may want to be a little bit more cautious and require a fresh break first. But if we do push down to the downside, I think we're likely to continue down to this level right here around the $1.08 even handle. Next up is going to be the pound yen, the beast. You can see the beast ended the week right at a previous level of structure resistance. Now, the yen in general is in a very interesting position. The yen has another monetary policy. I'm not sure if it's a meeting or an announcement coming up on Tuesday. And if you guys remember from a few weeks ago, right, what we've been watching with the yen is for them to basically come out and say, hey, we are going to stop our negative interest rate policy. Now, we thought that a few weeks ago. They were hinting at it, and then they came out and they didn't do it. And we saw the market spike in the exact opposite direction. That's why you see all this yen strength here. So it'll be interesting to see what the market thinks coming into Tuesday, because if they do, we may see some renewed strength in the yen, just as we did last time this was rumored. And if we are, that would mean a short opportunity here, which lines up exactly with what we're looking at from a technical perspective as we ended the week at a previous level of resistance with a nice indecision candle after a pretty high momentum move. You can see the RSI is overbought here as well. Now going down to a lower time frame, a 4-hour, right? Just as we saw a head and shoulders on the euro dollar, we may see something similar here. Now, regardless of if we get a head and shoulders or not, a violation of this level right here is going to be key to anticipating a downward move, but you never know how this is going to ebb and flow. We may just go straight down and blow past this level, or we may see some type of head and shoulders action like this, where we come here, retest it, and go like that, right? Either or, it's the same type of head and shoulders top situation that we saw on the euro dollar, but at a much better point here on the pound yen. Next, we're heading over to the dollar Canada, just as yen has news on Tuesday. The Canadian dollar is going to have news on Wednesday with an interest rate decision. Now, I don't believe any changes are rumored to be made, but if you know me, you know the Canadian dollar is one of my favorite pairs to trade, kind of this hybrid system where I blend fundamentals and technicals, because in my experience, at least, the Bank of Canada tends to come out and do what it wants. So sometimes the market has an expectation, a certain expectation. Bank of Canada doesn't really care about kind of beating around the bush and saying all this fancy talk and talking around the issue. They just tend to come out and make a change and then deal with it later. And that works really, really good for seeing some pretty decent extended moves in the market if you're on the right side of it, obviously. So although no changes are expected, what the market will be looking forward to is seeing if there's any kind of, I guess, changes in the verbiage that is used about the forward guidance. So, what they think is going to happen in the future. Regardless, from a technical perspective, here's what we have here on dollar Canada. If we go down to the hourly, right, you'll see we ended the week on a little bit of a downward move. We've come right into a previous level of structure, this level right in here. And it's about time price gives us a little bit of relief. Now, I'm not trying to tell the market what to do, but let me rephrase that. From my technical perspective, it wouldn't surprise me if we saw a little bit of relief at this level. Again, we saw the market diving down after breaking these levels of structure up here. The RSI is massively oversold down at 13. Would not shock me at all if we saw a little bit of a bounce from this level before the market decides to go on and do whatever it wants to do. I actually haven't checked out the volume or anything here. I do this analysis for the first time when you see me, or the first time for the video, not, we do it weekly, obviously, but we're actually not getting a lot of volume support right here. So what that tells me is that, hey, we may want to be a little bit more conservative, right? Instead of just looking for, entering at market, for example, right now, maybe you go down to your lower time frame and you wait for a double bottom, or you wait for a 2618, some more proof to show you that price is more likely to hold at this level and give a little bit of relief to the upside versus break right through. And again, that's the key of my trading philosophy. Aside from advanced pattern formations, I don't use limit orders. I don't sit there and just kind of enter aggressively. I have my levels, I ID my levels, I predict my levels, but then I wait for the market to show me proof in the form of candlestick analysis or candlestick combinations, classic patterns, whatever you may have. And after I see that proof and know that the edge and the odds are more in my favor than against it, doesn't mean I'm going to win every time, but it means that the edge and the odds are more in my favor than against it. Then I look to enter the move, obviously, if I have a good risk requirement. So keep an eye on dollar Canada at this level. Again, we may bounce a little bit lower. Our volume picks up closer to that 134 even handle, but from a structural perspective, I think this is a cool move, and it wouldn't surprise me if we saw a little bit of a slowdown and relief before that monetary policy comes out on Wednesday. Kiwi dollar, New Zealand dollar is next, right? Speaking of previous structure support, you can see price action has just come to a previous level of structure support. Price action ebbs and flows and ebbs and flows and ebbs and flows for you guys going through the foundation course. Again, this is why it's important to draw out these swings, not just to train your eyes to see them, but you'll notice that, boom, these swings also become previous levels of structure that are important. So if you're making predictions on which way you want to get involved in the market, boom, these levels are typically the ones that price is going to be pulled towards, right? You can see we have some other stuff there as well. AB equals CD pattern, maybe some Fibonacci confluence. I guess I should draw this on since it's an educational video. We probably have to go down to a lower time frame, but I'll kind of cheat right here and just draw this on. Copy and paste right down at that level. Do we have a 1618 Fibonacci extension? Fibonacci extension, swing high to swing low and back up. Nope, we don't have it's 1618, way off, right? It's Friday night, my eyes are off. Let's just see if there's any volume here. Again, I'm doing this live with you guys, or I guess you're not seeing it live, but for the first time, you can see, yeah, big volume spike in that level as well. So pretty decent level to pay attention to here on the New Zealand dollar. And what we see on the lower time frame is some consolidation, right? The market has slowed down. The market's trying to make up its mind on what it wants to do. You've already had your double bottom right here. You can look at this consolidation as an opportunity to bracket the market, whether you're looking at this on a 4-hour or a 1-hour. And what you do is you take your line tool, right? Your horizontal line tool, and you drag it at the low for support. You drag it at the high for resistance, and you say, hey, price is going to break out one way or the other from this level of consolidation. I may not know which way we're likely to break out to, but if we break out in that direction, then I'm looking for a continued move in that direction. Now, upside is going to be a little bit tougher because you have this little structure guy right here standing in your way, so it's hard to get a clear level of where that relief would come to. But you can see if we break out to the downside, it's a much clearer path as there's more room to the downside, especially as we look at here on a 4-hour time frame, where you can see we're at this structure swap right here. The next level we'd pay attention to is probably going to be right around here, right above the 60 even level. So something to keep an eye on. New Zealand dollar for a potential breakout. Which direction? I don't know, but bracket the market, wait and see, and then whichever way price tells you that's more likely to go, that's the way you want to get involved in. Hope you enjoyed the video. Remember, like, subscribe if you haven't done so already. And if you're interested in learning how to trade, check out our website, www.tier1trading.com. You have some great coaches, an even greater community of traders, and all the resources needed to help you become a consistently profitable trader. Not just training courses, but I'm talking with actually working with you through the process, because, well, that's the stuff that really makes a difference. So www.tier1trading.com. Check out the 14-day risk-free trial membership. Get on the platform with no commitment and test us out. And I'll see you guys next week, or I'll see you on the platform.